right, traders, within this video, I'm going to be preparing you to trade the best setups at the best prices, the top option plays heading into this week. It's going to be a huge week for earnings as well. So if you have a larger account and you do want to attempt to do some YOLOs on earnings, this would be a good week to do so. I'm planning to do that as well. If you have a small account and you can't afford to lose money, you can't afford to be taking the risk, you can't afford to not be doing what's best for your portfolio, then do not play the lottery. With that being said, I am going to be going over how to trade the best setups at the best prices. In terms of Friday, I was expecting a micro reversal. I was expecting a micro recovery bounce. That did not occur, and I adapted. I stuck to my trading plan. I bought Tesla call options when it bounced off the previous closing price, which was 710. I quickly got out within seconds for a 20% loss on the contracts. Then as soon as I got out, I switched to Tesla puts, made a quick 10% return, sold way too soon as they went up over 600%. Then I ended up buying SPY puts shortly after buying Tesla puts, sold those way too soon for a 30% return, bouncing back red to green on the day. With that being said, if you want to see the live trading footage of that stream, it's a great lesson of adapting to price action, because once that previous closing price reacts as a resistance, I'm willing to switch sides if I'm comfortable of the setup and buy puts instead of calls. That's going to be the second link in the description. If you want to check out the live trading footage, it's a great lesson from Friday. So let's get into it. Let's get into the best setups. So let's discuss the best setups that I'm currently looking at. This is going to be like a leap option play, and the chart is starting to look like K stock. So you guys are well aware the K leap options, they ended up working out phenomenal if you were patient with the June 27th. It's even crazy, even the June 17th, even the May 20th expiration even worked out. Those were absolutely insane. They were so cheap on this day right here, and then they skyrocketed like 10, 20, 30x the next day. But anyways, HRB is starting to look like K. If we compare the chart right here, just take a look at this. You have this gap up. It's just kind of sitting. It's consolidating towards the highs. It's losing volume these past 2 days. Look at these candlesticks. Look at this chart. Now compare HRB to K stock. K stock looks exactly like HRB right before it started to tank. So if you look at the chart, K stock gapped up. It started to have a little pullback, consolidate, lose some volume. These two candles are basically identical. And we're really just kind of sitting towards the top, sitting towards the highs, just anticipating this pullback that we're expecting to happen within time. Not saying it's going to happen right away, but within time, this is slowly beginning to look like K stock. So I have some HRB passive income midterm put options. I decided to play it super safe. June 17th, they can work out. I do believe it's more than enough time. I think those are fine. I decided to play it super safe and go with July 15th. The premiums aren't too big of a difference and they're still fairly cheap, so I'd rather play it safe and get more time on the contracts. I went with July 15th and I went with the $33, at the money strike. These are currently at $2 to $2.10. With that being said, I think within some time, once we can take out $32, we're going to pull back to about $30.50. Once we crack that, which would be my max price target, $28.60. So the price targets would be $32 and pretty much $30 is what I'm mainly looking for. And then the big price target would be $28.50. So, if it doesn't work out, one thing I want you to be aware of is we need to stay under 34. $34.05 has to react as a resistance. There's a little gap that's waiting to fill above at 34.05. If that gap does fill and we start to have a pullback, it starts to react as a resistance. It starts to break down. I'm willing to even add more to my put option position. If it starts to break out, that's not a good sign for the short term. It's really not. So we just have to stay below 34.05. If we can continue to stay below 34.05 and that continues to react as a resistance, within time, we'll see a crack of 32. Once 32 cracks, we bloodbath to 30.50. And then once 30.50 cracks, then it goes to 28.50. So that's my thoughts. That's my analysis on HRB. If this trade does not work out, then what I will be doing is I will be taking a slightly bigger position size when it approaches the all-time highs. The all-time highs are right here. There's a gap to fill at 36.89, which would be the best price to buy the puts. It still hasn't filled this gap. So once it goes back to these all-time highs and reacts as a resistance, that's going to be another and even better opportunity as its higher price in the gap close reversal strategy to be playing puts. So if it doesn't work out this time, I'm just going to size in a little bit bigger on the next trade. The win rate won't matter, and I'll cut my loss quick in this situation. And this will be a very nice 50 to 100% ROI if it does not work out in this case scenario. If it does, then we just wait for it to go back up to the all-time high for the second trading opportunity. That's my thoughts. That's my opinion on HRB. The chart is beginning to look like K stock. And like I said, if it doesn't work out, then I'm just going to play it at that higher price and wait for the next best price. So in terms of other situations, Tesla's getting very, very interesting. So from a macro perspective, we're definitely going to head back down on Tesla stock to right about here. This is where I'm considering to buy some midterm call options. Around 564, there's a lot of support. There's a gap to fill in the 564s. Tesla's a strong stock that likes to bounce at key levels. It finally cracked this support. A while ago, SPY cracked the support level from February 24th. It took Tesla quite some time to crack that, but you can use that as an indication. All these stocks are selling off their February 24th, the strong bounce where a lot of people felt like the market had bottomed out for the year actually. A lot of stocks already cracked that February 24th low, and Tesla didn't. It's like a delayed reaction. So you can use that delayed reaction. You can use that to your advantage with midterm and a leap options because they all tend to follow each other within time. There can just be some delays. So with that being said, in terms of Tesla, macro bearish, I'm interested in potentially buying some midterm calls. If we get a bullish confirmation in the 560, that would be a midterm option play. In terms of the short term, what are my short-term thoughts on Tesla? So this is going to be our key critical level that we really need to pay attention into heading into this week. 600 and let's see, $700. $700 to $710, that zone. If Tesla reacts as a resistance level at 700 to 710, so say it bounces back up, it reacts as a resistance, that's simply the stock bouncing back up to previous support, confirming that it's resistance, and then the macro is going to kick in. It's really going to start to go back down to start to fill that gap in the 560s. So what I'm doing on Tesla stock is I'm on the sidelines right now. I have my price alert set for $700. I want to see how it reacts at 700. If it reacts as a resistance, if it starts breaking down, I want to play some put options on Tesla as I expect it to go back down to about 650s if we can form resistance at 700 to 710. That's my only game plan for Tesla at the moment. I'm waiting to see how it reacts at 700 to 710. If it reacts as a resistance level, I'm going to be interested in playing the put options for Tesla if that can occur. So right now, I'm mainly on the sidelines as it just broke through some major support. I'm kind of waiting for a bounce back to see how it reacts. So yeah, that's kind of what it is that I'm looking for on Tesla stock. In terms of make it or break it levels for the micro, this needs to go above 660s. It needs to hold and go above 660s. Otherwise, it's going to try to crack 633. If it cracks 633, then it goes to 610. I'm kind of sitting on the sidelines for the micro. I don't like trading at all price levels. I'm trying to just trade the best levels at the best prices. So like typically when we get a major crack of support like that, and it has its big move, so it had a massive move from like $721 all the way down to 633, right? When that occurs, I typically just like to wait for them to bounce back up to the previous support, which is at 700 to 710. And then once that reacts as a resistance level, then I look to buy the puts again. So that's my game plan on Tesla. In terms of Bumble, I'm patiently waiting to buy some midterm put options on Bumble. For this one, in terms of how this goes with midterm puts, when it loses volume at the top, it consolidates and it chops up for typically like 1 to 2 weeks. Then it starts selling off. So we still haven't seen much consolidation at the highs yet. It's just slowly grinding up, slowly pushing up. We do have a gap to fill at 29.53. It has filled the gap and reacted as a resistance level ever since. So with that being said, in terms of Bumble, we need to wait for it to react as a resistance level. We need to wait for it to consolidate towards the top, give it about a week to form some bearish wicks, some bearish candlesticks. Then I'll look to start deploying some midterm put options, ideally at a $30 strike. SIGA, SIGA, right? This is a stock that's getting very, very interesting. The contracts are picking up in terms of the volume. One thing I dislike about these is the expiration is kind of further away. I would like a more short-term expiration when day trading. My game plan for this is to wait. It's to wait for the first red day. We gapped up into after hours trading session, nice big gap up. So I'm just waiting for the first red day. I don't want to try buying and chasing. I just want to wait for the first red day. Once we get the first red day, I'm going to look to buy puts at the previous closing price for this particular stock. One thing to mention is we have a lot of resistance in the 15s. So if that struggles at 15s, I'll be willing to play a put out there as well. The all-time highs on this stock are at 1521. In terms of after hours, it's now at 1549. If we can get a breakdown below 15 on SIGA, I'm gonna look to play some put options on this particular stock. We got very interesting strikes. The strikes are so weird on these, but I'll be going with the 14.55 strike if the volume starts deploying in. The spreads aren't too bad. So yeah, if we crack under 15, I'll look to buy puts. If not, then I'm going to sit on the sidelines. So if we crack 15, we're going to see a pullback to 1240. 1240, there's a gap to fill. We'll see how it reacts at 1240 with the gap to fill. That's the make it or break it level. If it holds, it rockets back to 1415. If it cracks, it sells off to about $10. So KSS, I'm waiting for an opportunity to buy puts. This is a very, very bearish overall macro chart for the time being. All these gaps are going to fill within the 20s within time. I want to buy some leap put options as we've now cracked some key critical support. And within time, the markets in crypto will be going much lower. So with that being said, I'm still looking to play macro leap put options. But I'm waiting for some sort of spike back. It would be nice if we can spike back to 45, maybe even 49. I'm looking for some sort of spike back on these retails to buy some macro leap put options. Twitter's looking pretty micro bullish at the moment. There's a gap to fill on Twitter right here at $38.69. It filled the gap. It's trying to hold up. If it breaks above 38.70, it's going to try to run to fill this gap at 40.72. Keep an eye on Twitter. Not the greatest setup, but it does look like it's due for a little short-term pop within some time. In terms of earnings plays, let's talk earnings. So with earnings, the most profitable ones to trade tend to be the highest price stocks, the ones that can move the most points. So ideally, like above $100. Some of the greatest earnings plays this year. I mean, Netflix was one of them, right? It dropped so many points. You want to focus on stocks that can drop earnings plays that are anticipated for a big move on very, very high price stocks. That's what you want to focus on in terms of earnings. So the ones I'm currently looking at are DK, DKS, ULTA, Dollar Tree, and BURL, Burlington. That should be a good one. I like that one. Costco, and JWN. So those are the top ones that I'm watching into earnings this week. I'm going to be put option focused. You can look to hedge with calls as well. So just know, I typically don't play earnings. The reason why I'm going to play earnings this time is because earnings have been on fire. And if you've been studying, that fire, it's been fairly predictable. It's like history's been repeating itself and there's been some delayed reactions, right? We saw retail get slaughtered. And if you were to play Ross put options, Ross stock, whatever that ticker symbol is, like there's been some delays, right? It's like a domino effect. One falls and then they all fall, but not at the same time because earnings are at different times. You see what I'm saying? So like it's kind of a no-brainer situation. Like look at ROSS. This was on Friday. This was before all the other stocks got crushed. This was before all the other retail got crushed, right? Like it's absolutely insane. Like it's predictable. It really is at times, not all the time. I just think this is going to be a predictable situation, because all these retails, all these big plays are selling off and they're getting crushed massively. So I'm seeing a domino effect with earnings is what I'm seeing right now, especially in the retail sector. So I'm looking to play puts before earnings on a couple different stocks. I haven't decided yet. The ones on my radar, ULTA is on my radar, DKS is on my radar, Dollar Tree is on my radar, Burlington is especially on my radar. I like this one. Costco definitely on my radar, liking Costco as well. Again, all put side. If you want, you can hedge with calls. And JWN. Those are the top earnings plays that I'm looking into this week. And just understand, this is the lottery, right? This is whatever I'm putting in. This is money I'm willing to afford to 100% lose, right? If it doesn't work out, these are going to be down like 70 to 100%. So with that being said, this is the lottery. If you have a bigger account, there is unfair advantages. There is all sorts of different things you could do, different types of strategies with the lottery. Say you play earnings every single quarter, and you put $100 in the first quarter, it doesn't work out, you lose it. You put $200 in the next quarter, it doesn't work out. You put $400 in the next quarter, it doesn't work out. And then the last quarter, you put in $800, and then that $800 5 to 10x's. You just made back all your money. So this is a long-term type of strategy. It's the short term doesn't matter. If I lose the short term, it doesn't matter, because like when it hits for the long term, we're looking at a 5 to 10x, and Netflix was a 50x play. There's been some crazy 50x plays. So it's going to be like just one of those out of money, most likely earnings plays. We'll have to see. But I am planning to deploy some capital in these. I'm fairly confident in these setups. At the end of the day, though, it is the lottery. It truly is the lottery. It's not recommended for small accounts. Not recommended for anyone who's not crushing it in the market consistently. Not recommended for anyone who's not in a situation to play the lottery, to just throw money into something that they can't afford to lose, right? So yeah, you just have to be aware of the situations you're in. I want to bring a lot of awareness to that, because that's extremely important. I didn't get to where it is that I am playing earnings, but if you have a large account, it's in a different situation where you can find success in certain lotto plays. And there's a time and there's a place to play lotto, and I do think it makes sense to be playing this, considering that all of these other stocks have been getting crushed during earnings, and we're seeing that same sector and we're seeing that same pattern, and we're in a bear market. So it just logically makes sense to give it a try, considering how big these returns have been with these recent earnings plays, right? So yeah, just wanted to bring some awareness to that, and I'm gonna keep you guys updated within Trader Society on my plans for earnings. It's gonna be a huge week for earnings. So that's gonna wrap up this video lesson. If you do want to be a part of Traders Society, that's my group, that's my team, click the first link in the description below. Watch the video, read everything on the page. If you want to join, you can join. It's instant access, and you get lifetime access to Trader Society as soon as you sign up, and it's instant access, right? So in terms of some of the things that are included, live trading sessions at market open. You get to watch me trade live every single day at market open. For example, my plan was to buy Tesla calls. I bought the calls on Tesla. It didn't work out. I got stopped out at 20% within seconds. As soon as I got stopped out, I bought puts. Made it all back on the puts, and then I bought SPY puts right after, made it all back, went from red to green, right? So you get to see me trade the markets live at market open every single day. It's a live stream. You get to see my open and close positions. You get to see my portfolio. You get to watch the charts, watch me trade live, hear the commentary, get your answers, questions live on spot in the live chat feed. You also get access to the community, the networking opportunities within the community. You can add us as a friend on Discord. We have great moderators, and the community, the Discord chat room, the real-time trade alerts, the daily stock analysis, the watch list, right? The written version of the watch list with the updated price action analysis, the real-time trade alerts, and then the video lesson library. That's going to teach you everything it is I know about the markets. It's going to show you how to master price action, how to master these unique gap trading strategies that I've created, risk management, position sizing, psychology, mindset to trading, right? I'm telling you, if you want to become a self-sufficient, profitable trader, this is going to be the right program for you. It is going to show you how to train yourself to become a better trader, right? How to become self-sufficient. So if you're interested in joining, it's going to be the first link in the description. I'm looking forward to working with you guys. I will see you tomorrow live at market open, and that is going to wrap up this video session.